Most people don't believe it's possible to make $2,000 before the New York session even fully kicks off. But that's exactly what I've been doing for years now. The crazy part is not some complex strategy with 12 indicators and wild price predictions. It's just one setup based on smart money and ICT concepts that show up like clockwork before the NY session even opens. And when it does, I'm ready. Now, I've been trading for 6 years, and after 4.5 years of consistent profitability, this is still one of my favorite windows to trade, and that's the London session. Quick moves, clean setups, low time commitment, and once you know what to look for, it's literally one of the most powerful ways to hit 1 to 2K days in under an hour. In this video, I'm going to show you the exact strategy I use to trade the pre-NY move, the liquidity patterns that set it up, how to enter, manage, and exit the trade with confidence, and how you can copy this without needing a huge account. Then I'll walk you through real examples of trades I've taken in this exact window so you can see how it plays out in real time. This is the same system we teach inside of AlgoPlus, and it's one of the fastest ways our traders build consistency while keeping risks tight and sessions short. If you're tired of over trading or spending all day waiting for setups, this is your edge, so let's get into it. So this is a really simple strategy, and it shouldn't take too long to teach you guys this. Also, we want to know a few things about the general information. So it only works with buys, So we're just going to mark that up. We're going to put works with buys, and then we want to go to the bottom right of our chart, and we want to select UTC +1, which is London, and we want to set that to London time. Okay, so 7 to 11 a.m. London time. So these are the most important things. We need to understand our time window, and we need to know what it works with. It only works with buys. So after that, we want to know how we can actually get our entry. So we can use liquidity concepts, or we can use the 3-step model, which I actually show you guys. So 3-step model works best. Now, I've been using a 3-step model for a very long time, for the past 4 years of my trading journey, and I can say it has made me quite profitable. I think it's the best model out there, and once you master it, you'll start to generate so much profit for yourself. So let's say we actually had our trading window coming up. We don't do anything before our trading window, but it's good to monitor what the market is actually doing. So boom, 7 a.m. hits. Now, during this window, we can have things such as a liquidity sweep. So during this window, we want to find a liquidity sweep. It can happen before or during. If it doesn't happen during, then we can look for it before. So that's completely fine. But as you can see right here, the first thing we can actually identify is a liquidity sweep. Boom. So what we also want to identify is some sort of market structure shift, correct? So this could be step 2, or sometimes this could be step 3, depending on how the market moves. But it's still 2 important steps: market structure shift, and on top of that, we have the rejection of the low, which is what I'm going to show you guys next. So let's say we had the market structure shift right after that. Boom, boom, boom. So what would actually make this step 3 and make this step 2? Let's say we had something like this. So I'm actually going to draw this out for you guys. And this all depends on the market conditions. Let's say we immediately went to break the high, and we had a market structure shift here. Then this would immediately become step 2. And then we would trace back into this, and then the market would start pushing. And this is where this becomes step 3. So step 3, you identify the rejection of the low, and sometimes you don't have to wait on the rejection of the low. Once we have a good market structure shift, and we can see that price is maybe respecting an order block right about here, then we can enter our trade. Now let me show you what makes this step 2, makes this step 3, and makes this step 2. So let's actually say we had the market do something like this. So if the market does something like that, and then we have a market structure shift of the high, now this actually becomes step 2. Sorry, 1 second. There we go. This actually becomes step 2, and this becomes step 3. And once we get the break of that high, that's even more confirmation to our trade. And what we'll do, we'll actually enter off of the 10-minute order block, which is somewhere in here. As you can see. Boom. And then we'll put our stop loss just below the low and make sure that it is actually a minimum of 5 pips. And we could target 1 to 2 hour, or we could even target more. The only way we can actually target more is if there's liquidity to target. Let's say there's equal highs to target, there's liquidity highs, there's imbalances or gaps in the market that we can actually target, then perfect, that would be completely fine. So another thing we should know is that we should be able to just time our entries. So like I showed you guys, between step 1 and step 2, you should be able to just time your entry. So sometimes you can't wait on step 3. That's the only part about this where you might get confused. So if this is step 2, sometimes you can't wait on step 3 because you might miss out. Let's say we had the pullback is showing signs of rejecting the low, and you might want to say, okay, let me wait for the market structure shift. And as you can see, the market structure shift came, and that's where you actually ended up missing out the trade, because what could happen, price may not even come back to that entry point. Or let's say we had the market structure shift first, and then yeah, it wasn't able to pull back. And don't forget, if you guys want us to actually pass and manage your funded challenge guaranteed, and you don't pay a single penny until you get a payout, click the first link in the description. We'll show you exactly how you can do so. But let's get straight into the example. I'm just going to show you guys where we can actually enter from. So you can see we did have a liquidity sweep, and I did say you could identify one that happens before. Boom, boom, boom. We had another liquidity sweep during the trading time, which is perfect. This is exactly what we want to see. So we're just going to let price do its thing at this point. So as you can see here now, what we can actually look for is the 15-minute order block. And when we talk about the 15-minute order block, it could be right about here. Sorry, not the 15-minute, the 10-minute order block. And we could just wait for price to pull back in, which is right here. Boom. And then we want to put our stop loss just below the low and target 1 to 2R. Now you can target more than 1 to 2R if you really think you should. Just be sure that there's an imbalance that you can target, or there's liquidity points that you can actually target. But 1 to 2 is always a safer route, and as you can see, it's in line with this liquidity high right here, so that should be totally fine to target. So you can see it does end up hitting take profit. It does come back to test the area, and then it starts to distribute towards the upside, as you can see right here. So it does end up going to the imbalance right there, which is extremely good, and that's what we want to see in the markets. So now we come to the next example, and I'm going to show you guys exactly how this works. And don't forget, if you guys want us to pass and manage your funded challenge guaranteed, we'll help you get a payout, and you don't pay a single penny until you get a payout. Okay, so the next example now. So here we go. Let's get into it. So as you can see now, we don't do absolutely anything before our trading time, but if the market wants to go up, it can go up. If it wants to go down, it can definitely go down. So you can see we have a liquidity sweep right within here, which is exactly what we want to see. So what we're going to do, you can see we have a 10-minute order block right here, which we can actually target. Let's see. Boom, boom, boom. You can see price does break through that, but what we actually do have right here is another 10-minute order block, which is right below here. And we have signs of another liquidity sweep right here. Boom. What we can do is wait for price to pull back into that. As you can see, it does. And we could put our stop loss just below the low, and that's quite small, so let's make it wider. Just about 8 pips is fine. And then what we could do is target a 1 to 2 risk to reward ratio, and as you can see, boom, it does end up hitting take profit. So if you guys did enjoy this video, don't forget to like, comment, subscribe, because it's free, and I'll see you guys in the next one.